Greetings, family. Today we are going with a full wide angle video recording, and we will be looking at the US oil. All right, you can see that it's US oil, crude oil. Yeah, well, the US oil is currently here. You can see is the barrel quoted to the American dollar. It's currently at a price of 120 American dollars. I believe I made some mistake by analyzing on the WTI, okay, which is crude oil. I need to analyze the US oil instead. So either way, let me change the the CFD. Let me see. I got it here on 77. Oh no, it's the correct one. It's the correct one, so it should be 77, right? Okay, yeah. So this is our case study. The reason why I decided to buy the US oil is because I have analyzed it on the daily time frame, and I've seen some inconsistencies, and I believe that price should rise all the way to 120 plus. Okay, so this is the case study. If you look carefully on the daily time frame, you will realize that price was actually trending downwards, all right, at this level here. So around this channel, price was trending downwards. And then right after the breakout around this level, it created an entry level for new buyers. And then once that was done, we can clearly see that around this area here, we did get an entry, okay, which most of us missed. In my case, I missed the entry because I wasn't looking at this pair, but I do see an opportunity right now where price is at. So price is currently at $76 per barrel, and I believe that it could rise initially to $77 per barrel, and then $82 per barrel, and then 85, and then 92, 93, 104, and then we have the highest price 116, and I believe that price could go above $120. Okay, so basically around the psychological levels that I've just mentioned. Now let's see how we can actually get to our initial idea. So yeah, this was my idea. Okay, this was the idea. We do know that price could look to be cheaper in order to give us a best entry, right? So we could see price dropping down before buying, or it could simply buy where it is. The reason I took this buy position is because I see that there's a current support level here. Okay, there's current support level here, but only if price closes successfully above. As you can see, we got a little fake out here, and I hope that this candle does close above, because if it doesn't close above the level, then we are going to take a stop loss and possibly see price reacting at the level below, okay, which is this level here. And it's okay either way. This will serve as a lesson to take the second opportunity, which is down here. So let's see if we can actually do a clean analysis. We need spot oil, so it's here. Okay, so yes. So how would we conduct this technical analysis? So we do see that we do have an area of market shift, right? The market was shifting at around this level here. So the market made a shift, and this indicates a new trend. And then afterwards, we also do see that the market consolidated around this level here. So this was a consolidation block. So we have a consolidation block. And if I extend the consolidation block, you will realize that price broke out of the consolidation block around this level here. So price broke out of the consolidation block around this level here. And I do expect a test of the block or just a continuation, because it's currently creating support. Okay, So since price is currently creating support, I do see price at least reacting here. Okay, you just want to make sure that you don't place it on the order block that is here, because price could reach that level and then react, but you have to be cautious about that. So having that in mind, I also see that price did have or did leave another strong major support structure level, which is here. So I will remove the consolidation block and just leave the support. This is the support, just put it here, which was resistance. Okay, it was resistance, but then price broke out and it became support. My letters are actually supposed to be black. Okay, so this is it. All right, and now price is currently creating another consolidation block, which is this one. Normally when we do have a consolidation block, we have to wait for a breakout or a rupture. So in my case study, I do see the possibility of price breaking out anywhere. All right, price could either break out below, could either break out here and then test here to move up. This is a possibility, right? You can consider that. Or price could then move to the upside and break out above and continue. Now, due to what we have here, which is the market shift or shift of structure, I do believe that the breakout should be above, all right? Should be up. It only makes sense that it will, or it should. Also, you know, if Iran and the United States are still at war, the price per barrel is going to increase. If that's not the case, then what's my other confluence? So my other confluence is, apart from the consolidation block that I have here, is price created a slight uptrend here. Okay, so it did create a slight uptrend here. If I draw a trend line, it would give us the idea that price actually broke out of the trend line, which isn't good. But at the same point, we will also realize that price has created a support after the break. So this is also another confluence. So it's still within the consolidation block. It's created support. If it does break below the support structure and continues selling, then yes, we are in for a surprise. But if it holds, then it could simply go above it. If I remove the trend line and we look at it like this, it doesn't look so bad. If I use an ascending parallel channel like this, it also doesn't look as bad. All right, so we could say that something like this is happening. All right, the good thing about this is that yes, if you consider breakouts, it's very important that you find the nearest level of support and resistance to use as confluence. And in this case, the only thing that is not looking good for us uh, whilst deciding to take trades on the US oil is this breakout here. This is not good. So because of this, we have to be very cautious. Now, if we go on the lower time frame, let me just put it like this and remove this and look at it from a different perspective, we will realize something. All right, let me remove the consolidation block and let me just put a line here. Excellence is texting. Okay, so this would be our stop loss if we take the trade there. Okay, stop loss here. uh, yeah, this would be our stop loss area and this would be our support, right? This is our support. For those that trend line breakouts, if we go on the 5 minute, we had a trend line here, right? We had a trend line here that price was supposed to hold after the breakout of that trend line. Price broke out here, came back within the trend line, rejected, and then went out. So this candle, let me just see if I can actually remove this as well. for now, and then just focus on the current candle that we have here, which should be this candle here would be our entry level, and then our stop losses would be below here. This is on the 5-minute, and it would look something like this, but only if price does not close below the current candle that I used as my entry candle. Okay, only if price doesn't close below that. So now we just have to wait. Should price close below that, then like I said, we are in for a surprise and we will get taken out, and price should come and react down below. This is something I don't want to see, but price is price. We only have to wait. Okay, so initially this would be our target, and then we would go to the 15-minute and see if there's another level around there that is lurking, and then we would increase our target to here, and then we would increase our target to here. This would give us a 1 to 16 risk and reward ratio, and I believe that finally, until the highest point ever recorded due to the inclination of the trend, this would give us a total of 163 1 to 63 risk and reward ratio. And if I go to the highest points, it would give us 164 risk and reward ratio. So positioning us in the best way possible, we would get one of the longest swing trades on US oil in history, depending on what happens fundamentally as well. So this is just a probability, all right? And like I said, price will most likely choose to react at a support level rather than here. Most likely. This is highly unlikely, okay, that price will actually respect our level here and then just go for buys. But we can expect anything because today we have NFP. So let's wait and see what price holds for us. So it's your boy Shao King. I'm out, and see you in the next technical analysis session.